Great to be back,
Shall
Tyler.
we start
Thank you.
with, I guess you could say the granddaddy of them all, that's Microsoft.
That it is. So they all have very similar themes, which I find interesting. But this one, I wanted to chart a daily chart. This is where the support is, right at 325. And you'll notice that all of the mega 7 are finding support on moving averages, which I find very important and cognizant to watch. So we're at 325 right now. As long as we hold this from earnings, then we've got upward momentum to 340 and then again to 350. If not, then we are testing this lower level, which is lower of 300.
So you would be bullish on this from what you see?
I would. This is the ample buying opportunity as long as it holds this line. If it does not hold this line, then that's when we flip to bearish.
All right, let's move on to the next one is Alphabet.
Yes. So Google.
Ooh.
This one, we are looking at a 13 weekly moving average. This is a longer time frame, and this is honestly my favorite charts. 13 weeks represents 1/4 of prices, so extremely important as we go into earnings season. This is sloping upwards, which indicates that bullish trend. I want to make sure that that is maintained. That is absolutely imperative. So as long as this level right here around that 132 is maintained, then we are going to still remain bullish. However, if it fails, then we're bearish once more. But if we have positive earnings with that AI story, I'm expecting that, then we can expect 140 and even 150 from all the way over here.
So if it dips below that purple line, if the price action dips below that purple line, that would be the watch out moment.
That would be the watch out moment. These are crucial. It's great. It's at support. We want to make sure that there's supply there. But if it fails and sellers come in which case we're going to flip bearish.
All right, walk me through Meta.
Meta. So Meta is also looking at the 13-week.
Same sort of looking chart, right?
Same chart, which is, I love using the 13-week again because of 1/4 of prices. Right now, same thing. Meta is right at its support line here. If that breaks, then we are looking at here, which is that psychological aspect that we talk about quite a bit. At one point, it teeters between support and resistance constantly. So if this isn't maintained,
so I'm going to drive them crazy. I'm going to walk over here.
So, I like it.
So does that trouble you, that little part where it dips below that 13-week moving average?
So this doesn't bother me too much. We look at weekly closes. There are other moving averages that I like to layer on top of this. So you'll notice that even here, it goes above, but it acts as a mean of resistance.
I see.
There are others I add to this, the 26 and the 40, which are 2 3/4. So we want to see rolling prices.
You know, if this technical stuff doesn't work out, you could be a weather person.
Yeah.
Right? It was really well done. You brought a contrarian play along for this. So bottom line on Meta is if it stays above there, you like it. If it dips below, you don't like it.
Yeah. The beauty of all of these
You're making it so simple. I can't stand it. All right, let's go to AT&T.
Yeah. So AT&T. Again, looking at that weekly view, this is clearly a downtrend. We define downtrends as lower highs and lower lows, which is what we see. But on the weekly view, there is a indicator that I like to use as a forward-looking. It's called MACD. It uses EMA, which is an exponential moving averages. Make it simple. It puts weight on current prices, so that within the calculation, so that makes it forward-looking. That has turned up at the bottom here, so that means at minimum we could expect a rally upwards. Pair that with some positive free cash flow on the fundamental side, we're looking at a contrarian.
You're looking at a contrarian pick there.
Yeah.
Jessica, thanks very much. Good as always to see you.
Thank you.
Thanks so much. Kel?